biggest dividends of Brexit for the UK, especially as it relates to science and technology, if you're looking at progressive regulation, we have a grown-up, mature conversation with regulators in this country where they're 20 minutes down the road and we don't pretend they don't exist. We say that technology and science are ubiquitous in society. Of course, it's going to need guardrails. So let's work together.
Welcome to Technovation. I'm your host, Peter High. My guest today is Saul Klein. Saul is the co-founder and managing partner of Phoenix Court, which includes 4 different venture capital firms: LocalGlobe, Latitude, Solr, and Basecamp. He's a former partner at the venture capital firm Index Ventures as well. Saul was appointed as a non-executive director at the Department for Science, Innovation, and Technology, and is also a member of the Council for Science and Technology, which advises the Prime Minister of the UK on science and technology policy issues across government. In 2012, then UK Prime Minister David Cameron appointed Saul to be the UK's first technology business ambassador to Israel. And in 2016, Saul was awarded an OBE for services to business. I look forward to drawing upon Saul's diverse perspectives and experiences through this conversation. Saul, welcome to Technovation. It's great to speak with you today.
Great to be here. Thanks for having me, Peter.
Of course. Well, Saul, you are the co-founder and managing partner of Phoenix Court, which includes LocalGlobe, Latitude, Solr, and Basecamp venture capital funds. So 4 different funds under an umbrella that is Phoenix Court. Talk a bit about that, if you would, the constitution of an organization like Phoenix Court and the rationale in having 4 different venture capital funds underneath it.
Sure. Well, Phoenix Court is the name of our space, our home. The reason why we've taken the approach of having different funds with different names is because each one of the funds has a very specific strategy. And, you know, from my perspective, it's really important that all of the key stakeholders for those funds, most importantly, the founders that we back, the co-investors that we work with, the LPs who invest in those funds, really understand the job that each one of those funds are doing. And simply put, LocalGlobe is focused, and this is really our heritage, at pre-seed and seed stage. So if you think about the area in which we operate broadly, EMEA, 1% of the 3,800 active VCs in EMEA have ever picked one unicorn at seed stage. So you're 99th percentile if you've picked one unicorn at seed stage in EMEA. We've done 13. So the job of LocalGlobe is to be the best active VC in EMEA picking unicorns at seed stage. So obviously, if you're a seed specialist like LocalGlobe, you've done 13. It happens to be top of the list. If you're not a seed specialist like Axel, specializes at Series A, you've picked 3 unicorns at seed. If you're not a seed specialist like Sequoia, you've picked 6 unicorns at seed in EMEA. So the job of LocalGlobe is to be number 1 of all active investors in EMEA, VCs, picking unicorns at seed. The job of Basecamp, which is an angel LP, I hope it's not too jargony, but just basically means we write small checks in other funds. We've been doing that for about 10 or 15 years. We've got 60 plus relationships, around 45% in the US, around 45% in EMEA, and 10% in APAC. And those 60 plus Basecamp funds, solo GPs, micro funds, if you looked at their ability to pick unicorns at seed, they are number 5 globally in terms of all active VCs. And if you look at their ability to pick a future unicorn, companies valued at 250 to million to $1 billion at seed, they're number 1 globally. So if you think of the funnel of startups, venture-backed startups globally. There are around 150,000 startups globally that are still alive. And picking the 1% that could become a unicorn is really challenging. So what we've tried to do is to build signals at the top of the funnel. LocalGlobe #1 in EMEA, picking unicorns at seed. Basecamp #5 globally, picking unicorns at seed. And then we have sister funds, Latitude, that focuses at the Series B or C stage, and then Solr, which we piloted a couple of years ago with a partner in the UK called M&G, which is a big domestic asset allocator. Solr starts at Series D and continues to hold its position through IPO. So what those funds allow us to do is very simply try be one of the best in the world picking unicorns at seed with LocalGlobe and Basecamp, and then concentrate capital and time at Series B, C with Latitude, and Series D plus Solr with the companies that are most likely to become very material. And just to give you a sense of where we sat coming into 2024, in 2023, we had 46 companies across our funds that did more than $25 million in revenue. And we had 26 companies across our funds that did over $100 million in revenue. So your average venture fund would have maybe 1% of companies doing over 100 million in revenue. We have over 10% of companies doing over 100 million in revenue. And we think that's because we really focus on picking at seed and then using the access, insight, and engagement that we have with those companies and others that we've met but maybe not invested in, or that Basecamp managers have invested in, to concentrate capital with Latitude and Solr. So it gives us the ability really to, in the ideal world, back a founder from seed through their public listing.
At the risk of asking you to be immodest here, Saul, what is the differentiating factor? You noted building signals, and I'd love to understand what some of those signals are that are allowing you to have such outsized performance.
Well, I having been in this industry, and by this industry, I would say the sort of the technology industry for 30 years now, which is over half my life and all of my professional life, in the US, in Europe, in Israel. As a humanities graduate, I can only give you a humanities answer, which really bothers us. So what we started to do about 8 years ago was to build data and software around our workflow and process. And we used software, to not just look at the 150,000 venture-backed companies that are out there, which I think a lot of people do and have done. I mean, we started doing that 10 years ago when I was at Index, and that's kind of, I would say, table stakes for a big fund. I've always been less interested in third-party data. I've always been more interested in first-party data. So what we've done really in the last 8 years is build a lot of first-party data and insights that have been baked into our software, our systems, and our workflow. So if there are 150,000 companies we could back, we've got 10,000 companies in our pipeline, either that we've invested in or that we've previously met but didn't invest in because we were too stupid, or we were too slow, or they were different companies at the time, but we've still continued to track them and their progress. And then, as I said, the sort of the 5,000 or so underlying portfolio companies that these Basecamp managers have invested in. So effectively what you then have is sort of 4 to 5% of the global venture signal, but starting with the #1 picker in EMEA at seed and the #5 global picker at seed. So the signal should be higher than for Latitude and Solr to sort of think about capital concentration. But to be honest with you, even though that product is 8 years in the making, as you would know, software grows and it develops, and if it's baked into your workflow, it just keeps on getting better. So we're actually only at version 0.3 on that software right now.
Remarkable progress, Saul. Thank you so much for noting that. So I would love to dig a little bit further, if I could, into the European market. Obviously, it's a market you know quite well as someone who has spent so much time both growing up as well as professionally in Europe, and especially in the UK, among other places, as you previously noted. It's fascinating to see. We spoke previously about the fact that if you look at the top companies by market cap, only 3 of the top 30 are in Europe, and only one of those 3 is a technology organization. By contrast, of course, here in the US, the top 5 are
by top 30 companies, you mean in all sectors?
Across sectors, exactly, market capitalization based. And the top 5 anywhere in the world are Microsoft, Apple, NVIDIA, Alphabet, Amazon, all US based, all technology centric. And then if you go further down the list, a lot more US based companies, and a lot of those technology based as well. You're talking about your rationale or reason for being optimistic enough to be an investor, and maybe that's the wrong way of framing it. Maybe it is just that you've got the tools to be able to pick in a very difficult environment, to pick the winners relative to sort of a place like here in the US.
Look, I think it's a great question. And, the problem with a snapshot, is it's really backward looking. It's not forward looking. So, if you look at, and I do this a lot, as you rightly say, 7 actually out of the top 10 companies in the world are not only tech companies, but they're venture-backed tech companies. One of the 7 is actually a sort of a Taiwanese tech company, TSMC, that was backed by a European CVC, actually Philips, and a sort of a sovereign, the country. But in the same way, so you got 7 out of the world's top 10 companies that are tech companies, as you said, and all of them had venture backing, and none of them existed 40, 50 years ago. So the way I would sort of look at this is zoom right out and say, in a sense, venture capital started in 1971 in Silicon Valley with the birth of the microprocessor. And the first age of venture started in 1971, a year after I was born, and I would argue ended with the Netscape IPO, which is like at the beginning of my kind of professional career, 94, 95. And in that first age of venture, the iconic companies that were created in that first age of venture were, let's call it 80% hard tech, semis, PCs, networking. I'm looking at you, Cisco, Intel, Apple, and then, the soft tech winners there were Microsoft and Oracle. The next age of venture was starting with the Netscape IPO. Let's say it ended when the WHO said COVID was a global pandemic. And arguably the next stage flipped it on its head, and it was 80% soft tech, Google, Meta, Amazon, Netflix, Uber, Airbnb, the list goes on, and 20%, maybe even only 10% hard tech. And the way we sort of look at the world is, the next era of venture is going to be more like 50-50. And what is hard tech? It's not just soft tech, but it's technology that is facilitated by radical breakthroughs in science, engineering, and technology. And if you look outside my window, I can see the Crick Institute. Now, the Crick Institute is not the Broad Institute, but it is the world's second best center for genomics and computational biology. So there are 4,000 researchers across the road and 4 Nobel Prize winners. And if I walk 5 minutes, literally, to St. Pancras and King's Cross, the global headquarters, note the global headquarters of Alphabet's AI division called DeepMind, which is also spun off Isomorphic, which, is operating at the intersection of AI and computational chemistry and biology. If I get on the train at King's Cross and avoid platform 9 3/4 and don't go to Hogwarts, I go to Cambridge, I'm at one of the world's, not Britain, not Europe, one of the world's top 3 universities, Cambridge University. If I go to the other direction, I'm at one of the world's top 3 universities called Oxford University. If I go 20-30-minute walk, I'm at UCL, top 10 global, and Imperial. So we've got 4 out of the world's top 10 universities within an hour or so from the office. And if you believe that innovation is no longer just the preserve of Palo Alto and Silicon Valley, but you believe that innovation is now, the preserve of an ecosystem that's only been doing it for 20 years. Remember, we are 30 years behind in our development. You could argue that if you did one of those day zero lines of how fast did Skype get to 100 million users? How fast did Instagram get to 100 million users? How fast did ChatGPT get to 100 million users? We're ahead of you.
Yeah, very, very interesting. As somebody who also has government appointments as well, in addition to all that you've described and your investments in startups across Europe, talk a bit about your perspective on the role of Brexit in all of this, as you talk about the inherent advantages, which are many and very well cataloged a moment ago. It seem, at least from most pontificators that I'm in conversation with, that's an impediment to some of what you've described as well. But would love your perspective on it.
Look, my perspective on this is partially, again, informed by the humanities and partially informed by social science. So, although I did study history to certainly my late teens, I remember, even as a young kid, reading about the Norman invasion and the Battle of Hastings in 1066, and sort of like realizing that, we've been trading with France for 1,000 years now. And there's lots of things that have happened in those 1,000 years. There are wars, there are, Metternich, Bismarck, I mean, you name it, right? And you know what? We still trade with France. If I want to go to Paris, I'm sitting in a room called Paris. It's closer for me to get to Paris on the Eurostar than it is for you to go from San Francisco to LA or from New York to Boston. So, there is the sort of the historian in me that says, if you take 1,000-year view, kind of get over it. And then there is the social scientist, which is, I'm a big fan of Carlota Perez's work, which you may be familiar with, but she talks about, the waves of sort of innovation. And, she talks about 50, 100-year waves. And again, if you go back to the information age, which is starting in sort of 1971 with the birth of the semiconductor, you connect semiconductors to computers, you connect computers to networks, that gets us the internet. You put data in the cloud, that gets us the cloud. You have devices that are connected to the internet and people can put in their pockets, that gets us mobile. I'm not even gotten to AI or genomics or whatever yet. If you just look at the proven waves, semis and PCs, number 1, internet, number 2, cloud, number 3, mobile, number 4. 52 years after semis were with us, what is the most talked about company in the world today? It's NVIDIA. What else has been talked about a lot in the last year or so? ARM. what company is likely to go public in London in the next 4 weeks? A semiconductor company. What is the most valuable European technology company that's within a 4-hour train ride from here? ASML, supplier to the semiconductor industry. We talked about TSMC. How much would Philips's stake have been worth today? The 27% that they bought for $50 million and then sold their whole position in 2008. How much would that have been worth today? $230 billion. So my point in all of that is, small political cycles like the European Union or Brexit are way smaller than the waves that we're talking about here when we talk about innovation. So that's the social science lens. And then the historical lens, the human being lens, is like, people still work with each other. People still trade. And you know what? There's this really cool thing that Vince Cerf helped to develop through DARPA funding called TCP/IP. That is the transport layer for Perez's information age. And last time I checked, we were not firewalling conversations with France, with Germany, with Belgium, or anyone else in the European Union. And arguably, and I voted Remain, to be clear, the only dividends, or the biggest dividends of Brexit for the UK, especially as it relates to science and technology, is that we have obviously all of the same historical social science advantages. We're back in Horizon, we're working closely with all of our European colleagues, we're co-investing in one another's markets. But if you're looking at progressive regulation, which last time I checked, most leaders of US companies were going to Congress and saying, please regulate me like this. We have a grown-up, mature conversation with regulators in this country where they're 20 minutes down the road and we don't pretend they don't exist, like Bill Gurley and others on the West Coast. We say that technology and science are ubiquitous in society. Of course, it's going to need guardrails. So let's work together.
Really great perspectives. Thank you so much for sharing those. And I want to double click on a couple of things you said. You've spoken about the third age of venture, a new era that's emerging, one with policy alignment, a balance of soft and hard tech, as you noted, 50-50 is your projection, and a commitment to long-term impactful solutions to societal challenges. I would love to have you talk a bit about, as you are making investments, putting your money where your mouth is on this. Talk a bit about some of the things that excite you most as you look to the third age of venture.
Well, in terms of putting our money where our mouth is, the vehicle that we didn't talk about at the beginning, which is actually our fifth fund, for want of a better word, or the fifth estate, within Phoenix Court, is when we created Phoenix Court as a sort of an institutional vehicle in 2015, we made a decision to do the following things. One, allocate 10% of profits in the management company and 2% of carry in all of our funds into a foundation. The foundation is designed to make real, to put our money where our mouth is, our purpose as a business, which is to be a good long-term neighbor and to help people realize their full potential. And being a good long-term neighbor, as anyone knows, starts at home. So 80% of the allocation from our foundation, Phoenix Court Works is there because it's very active in our neighborhood. 80% goes within a square mile of our office, and that supports around currently 35 organizations, including the primary schools, the secondary schools, the doctors' surgeries, the youth centers, the social enterprises. And you could say, like, well, why are you doing that in the middle of, you got Google across the road, you got Meta across the road, you've got DeepMind, you've got Universal Music, you've got Havas, you've got all of these universities, you've got the British Library. It's like, this is one of the richest cities in a G7 economy. What are you doing? Like, what's wrong with your neighborhood? Well, I'll tell you, If you are the neighborhood between three of the biggest transport hubs in one of the biggest cities in the world for the last 150 years, you're also the poorest neighborhood. So this neighborhood, the health outcomes for people who live in this neighborhood are, if you're an adult, you'll live 20 years less than in Highgate, which is 15, 20 minutes up the road. If you are a kid, 5 out of 10 kids receive free school meals because their parents at a household level earn less than $10,000 a year. If you are a kid in Somerstown, which is our neighborhood, 7 out of 10 kids are on social care. So, you know, when we say being a good long-term neighbor and helping people realize their full potential, that starts in our neighborhood, 80%. And it's real because it costs us. It's from the profits of the management company, it's from the carry of the fund. So as far as I'm aware, other than generation, I think we're one of the few funds in the private markets who do this. And we do it, you know, not just because we think it's the right thing to do, but because actually, to go back to why do I feel like this is new Palo Alto? As I said, we've got all of the innovation capabilities, the science, the technology, the capital base, you know, the number of founders, successful entrepreneurs. That flywheel is turning. Yes, it's only been turning for 20 years, not 50 years. But, you know, as you know, when flywheels start to turn, they start to turn fast. And actually, new Palo Alto, after the Bay, is second only to the Bay Area globally in terms of an innovation cluster, in terms of outcomes, access to capital, and importantly, IP and R&D talents. We talk about a new Palo Alto not as, oh, we want to be the next Silicon Valley. I don't want to be the next Silicon Valley. You know, Silicon Valley will always be Mecca and Medina for startups. We want to be a different Silicon Valley. So when we say new, it's not the next, it's a different one. And it's one that is based on values and governance, not just a single stakeholder economy where the stakeholder is the investor or the founder. Because I think as successful as Silicon Valley has been, and to be clear, the Bay Area has created $10 trillion worth of enterprise value from VC-backed startups, which is 34% of the global total, which is why I say it's Mecca and Medina. It hasn't always turned out that well for people. And, you know, this is where talks before we went live about sort of cultural divisions. Not always clear to me, you know, that the US model, while having created enormous economic value, incredible growth historically, you know, is aiming at a level of equitable distribution that is creating a political and cultural environment, you know, where people are looking at the next 10 years and saying, I feel really good about what I'm going to get in November. To answer your question,
yes,
you know, what does that actually mean as it relates to our investments? Well, obviously, the bet, if you like, rational bet is if you effectively have a business model where you're taking money out of your business to put into a deprived local neighborhood, you will attract a certain type of team member, which is very values aligned. You will attract a certain type of founder who's very values aligned and impact driven. And I've never met a great founder that isn't mission driven. And then you will also hopefully attract and work with LPs who share your values, who are long-term in their thinking. And so, you know, again, it's not just the right thing to do, it's, in my view, the rational thing to do, because our team, the founders that we back, and the people who trust us to invest their capital to get a great return, that's our flywheel. The better our returns, the more money we get to put into the neighborhood.
An analogy that I'm intrigued with, and I wonder if this makes some sense to you. If you look at the greatest rock artists from the UK versus the US. The UK has the Beatles, the Led Zeppelin, Rolling Stones, the Kinks, etc. On our side, it's all individuals, right? It's Bruce Springsteen, it's Bob Dylan, and in many ways, that's sort of like emblematic. It has said, I'm not the first to develop this analysis of the individualism of the US versus the sort of team activity, if you will, of the UK. For instance, we'll use the UK rather than all of Europe, as it's where you are seated currently and where the predominant part of our conversation has been focused. And I wonder to what extent that then extends, as you're kind of describing. So forgive me, I'm piggybacking on your idea here, as opposed to formulating a new one for our conversation of the nature in which work is done. I don't know. What do you think of that analogy and its application in how you're investing and what you're seeing in the progress you're making?
I mean, in all honesty, I hadn't really thought about it, but I think it's a really interesting thing to think about. I'm sure there's some healthy counterexamples in the US. Immediately the Doors sprang to mind, but then you're going to play Jim Morrison back at me. I think, we've got a lot to learn, and we still have a lot to learn from the US. I think, while, there is this sort of narrative of individualism in the US, there are also this understanding and recognition that neighborhoods, communities, organizations, great companies get built by teams, not just by individuals. Now, the narrative may focus on the individual, but I thought, there was this incredible moment in the last couple of years when Elon Musk was, to the extent that he ever feels pressure, being sort of challenged at how can you run Tesla, and how can you run SpaceX, and how can you run the Boring Company, and you just bought Twitter, and you're doing all of this stuff. And then I love watching the Tesla earnings calls, and there was this call that he did, and as an English graduate and as someone who wrote plays and did drama, in my teens and university years, I kind of appreciate the drama and the scripting. And he opened the earnings call, and then for the 99% of the call, he just had this sort of lineup of total rock stars talking about software or battery charging or hardware development or insurance or the financials, and all of them to a person was like absolutely clearly world class at what they did. And all of them said, for the 5 or 10 years that I've been at Tesla. It's like he just sort of pulled away the curtain and said, you might think this is all about me, but actually, there's just like this killer team here. And the bit that he took for himself in the middle, which I thought was like kind of amazing as well, is when he talks about Optimus, the robots that they're building there. And he effectively, not in a polished Steve Jobs type way, but sort of just took the lid off, this humanoid robot, that was picking up tissue and holding it in their hand, and the sort of the fine tactile movements, and talking about the fact that, like a car is just a robot on wheels. And you're just like, okay, nothing gets to that scale unless you have exceptional individuals, not just him, but amazing teams. And to be clear, at least when it comes to growing companies, as you pointed out, that are sort of some of the top companies in the world, we're still many decades, I think, behind where the US is today. Although I think, as I said, we're catching up fast, and we're quite fast learners, and we've got some smart people in Europe and in New Palo Alto.
Thank you again for those reflections. I want to, another aspect that I've read about your philosophy is the necessity to demystify venture. You've talked about how venture capital has to be more accessible, more diverse, and more transparent to drive lasting value creation. Can you talk a bit about your perspectives there and progress made so far?
Yeah, look, I think it goes back to your point about what are the biggest companies in the world right now. And, because they're so big, we forget that these were venture-backed businesses, that, an angel wrote a seed check, a VC wrote Series A check. And, when these companies are doing tens of billions of dollars in revenue a quarter, and those are the smaller ones, we just don't think of them as startups, but all of these companies were venture-backed. And, what we don't recognize, because it's very hard for us to zoom out, people don't typically do that, and everything in our world is telling us to zoom in, is to sort of, focus on the stream. Our attention is constantly being competed for and bombarded against. So we don't zoom out. But when you zoom out, 7 of these 10 companies are startups, really, that got to extraordinary scale and got there because venture capital at some point in time said, these are founders worth backing. And I think it's pretty scary when just with those 7 companies, you've got $17 trillion of enterprise value, and people don't know how venture capital works. I think that's really scary. It's sort of a big failure at a social and an economic level that, the way that these companies get financed and built is basically still a kind of a cottage industry that people talk about in medieval terms, like it's artisan, it's an apprenticeship business. Like, basically, that's a way of excluding people, in my mind. And it's done a great job of excluding people, venture, because it's trying to sort of aggregate, the returns and the insights and the knowledge, in the same way that before the Reformation, sorry, I'm being a historian again, Latin and Greek did, before we had publishing, before we had Martin Luther. So most of the way we think about venture capital, which has produced these 5 or 10, 7 largest companies in the world, is still medieval, or at best the Renaissance. And here we are in the 21st century dealing with AI and genomics and distributed ledger technology and quantum, let alone cloud, mobile, and the internet and semiconductors. So I think, it's time that we stopped not even infantilizing people, just like not even bothering to believe that anyone other than the high priests should have knowledge or be educated.
Very interesting. I was also one of my majors is university was history, so I love all these analogies. I appreciate you sharing those. I wanted to ask you, as somebody who has spent considerable time and made considerable investments in Israel, if you could talk a little bit about what you see as the secret sauce of that economy, which again is a very small country in the grand scheme of things, and yet has produced remarkable value, talent, now tremendous investment. Talk a bit about your perspectives on that economy, if you would, and what excites you about it enough to put your money there.
Sure. I mean, and again, we put our bodies and family there from 2010 to 2012, and I think it was an incredible experience for me and for our family. We have 3 kids, but we didn't have our third at the time, so the older 2 were very young and at primary school. So we felt it was a good opportunity to spend 18, 24 months somewhere else. My wife had family out there, and to be honest, I was a pretty big skeptic about Israel going there. Even though I'm Jewish, I didn't really have a very nuanced view of Israel. I had a very much a media-driven view of Israel. And what I saw on the ground, as you said, is like this extraordinary place where the constraints of the society, and I mean, I'm not going to talk about it because there are 2, the best person on this, I'm sure you and some of your listeners have read some of his work, is Saul Singer, who wrote Startup Nation, and then more recently which I think is a brilliant follow-up, wrote a book called The Genius of Israel, which is about, beyond tech, the sort of the resilience of the Israeli society, not just the economy. And there are sort of factors in Israel that may be unique to Israel, but actually, in the reading of his latest book, I think are lessons for the world. The social structures, the teamwork, to go back to your soloists versus bands analogy, people work as teams in Israel in just an extraordinary way across society. And you see that again and again, often for reasons of resilience. But, David Ben-Gurion, who was one of the founders of the State of Israel, when he retired from being the prime minister, he went south to the desert. And I think, the story goes, and someone will be able to correct me, is, he was walking through a place in the Negev, and he saw some young 20-somethings looking to sort of set up a community. And he found it very inspiring that, in the midst of a place where nothing grows, a desert, here were people looking to set up a community. So there's that pioneering spirit, that's like crossing the Mason-Dixon line that you have in Israel. There is this sense, which great innovation needs as well, is that everyone is against us. And then you have these social structures, whether it's sort of the IDF or even just going to your family for Friday night dinner, that creates all of these social cues that are about collective action. And so, on a dollar for dollar basis, Israel is the most productive innovation economy in the world, hands down. And it's why, when we look at where do we focus our investing, there's not a lot we can add to the Bay Area. There's not that much we can add to New York, but the only other 2 or 3 cities in the world that have produced more than 100 unicorns are London and Tel Aviv. So we're very active still in Tel Aviv and Israel. And, I would just recommend for those that haven't, read both Startup Nation, which is, probably 12 years old now, and it tells the story of tech in Israel and how tech became 40% of GDP. But actually, I find Saul's latest book, The Genius of Israel, even more interesting because it talks about, how at a societal level, Israel has kind of got this remarkable resilience despite everything that's going on there.
Fascinating perspective, certainly, Saul. Thank you so much for sharing those. And thank you more generally for a really thought-provoking conversation covering numerous areas that are emblematic of your broad mind and perspectives and curiosity. Really appreciate you taking a little time with me today.
Brilliant. Well, thanks so much for the time, and look forward to hopefully seeing you in person when you come through London. And looking forward to any thoughts or comments your listeners have on some of the things that I've got wrong in our conversation.